right. Good afternoon, everyone. Um, I'm Bobby Argitis, Senior Investment Specialist here at National Bank Direct Brokerage, and I have with me Gary Christie, Senior Technical Analyst and Head of North American Research with at Trading Central. Our webinar for today will be Demystify Fundamental Analysis with Trading Central's Fundamental Insight Tool. In terms of duration, I know we have it for an hour. The goal is maybe 40, max 45 minutes of presentations, and then we'll have a Q&A. During the course of the webinar, if you have any questions that come to mind, don't be shy. Write them up in the chat, and we'll try to answer as many questions as possible during the webinar. Maybe do a little bit of housekeeping also. So obviously, we're talking about Fundamental Insight today. It's one of our newer tools here on the National Bank Direct Brokerage platform. I find it one of our interesting tools. For those of you who think of like fundamental analysis, not too keen about it, but I'd say it's an ideal tool to help you either. You can certainly use it to find investment ideas, but you can also use it, and I personally use it more to validate investment ideas. So I myself like spending time in our research section. So I like to consult the research reports from National Bank Financial and from Morningstar. And if I want to get a second opinion, or I'm looking for something just to, like obviously research reports, some of them are just a few pages. Some of them feel like novels. With the fundamental insight tool, it really helps me get a quick snapshot of how the tool is supposed, of how the tool gives me to help you analyze it. And I'll let Gary really give you more of a breakdown. Obviously, it's important, the information provided in this webinar is strictly for information purposes, and it's not a recommendation. On our part, obviously we'll be using examples of securities, and they're just examples. It just makes it easier to present the information. So obviously, as self-directed investors, you are ultimately responsible for your own investment choices. And you know what, Gary, before you jump into it, can you maybe take, I don't know, a minute, 2 minutes, just who you are, who's Trading Central, just for those clients who it's the first time they've seen this tool.
Absolutely, absolutely. Thank you, Bobby, and happy to be back here with you, Bobby, and with all the National Bank clients. Interesting topic, interesting times. So yes, I am Gary Christie. I'm in my Ottawa office at Trading Central, and I'm a technical analyst by trade. So it's kind of unique that I get to talk about fundamental insights and fundamentals, as I think this tool really complements technical analysis, and a tool that really, gets me interested in fundamentals because it's done in a different way, and it's not analyzing a bunch of statements. So part of my job here at Trading Central really is I help develop this product, right? So we support all our product lines. We have tons of insights at Trading Central. My main background, of course, is technical analysis and trading specifically. And I'll jump into that here in a quick second. So again, here's a little bit of brief about me, where I come from, and what I've done in the past. But really, I'm a trader at heart, right? That's really my passion. I've been an active trader for over 20 years, and I've been helping fellow traders build disciplined trading plans to help them become more consistently profitable traders and investors using the tools that we provide at Trading Central. So my main specialty is in derivatives, options, and technical analysis. But now we've brought into this new world of fundamentals at Trading Central to really help disseminate the news and have, the whole point is having insights to give you an idea as fast as possible, to not have to delay the process of trying to find investment. So making it simple, simplifying research is our passion. And we'll show you a bit about that today and how I use it as a professional. So going through, again, Bobby touched on the disclaimer. I'm going to talk about real stocks today, of course. It's fun that way, and it's the best way to learn is by using real life examples. I'm not here to give advice, although that is my day job. I do advise institutions, hedge funds, high net worth individuals all around the world. Today is more about the tools and how you can empower yourself to learn how to analyze fundamentals to just help you decide, or as Bobby was saying, help validate your idea, which is a really good way to use the tool. So we'll jump into that. First things, first, again, here's a quick agenda. What we're going to talk about today. We'll go through the methodology, our thought process as to why we built fundamental insight in this manner, and we'll give you a live demo right in the National Bank Direct Brokerage website. So stay tuned for that at the end, but it's important to understand the why and how we built it, and so you can better understand how to use it to find some opportunities. So for those that don't know what Trading Central, we've been around for quite some time now, right? Since the .com bubble era, and in Ottawa, we were referred to as Recognia. Some of you might have seen our tools as known as Recognia. Then Trading Central bought Recognia in around 2015. But we lead a bunch of insights all around the world. So we do technicals, fundamentals, quantitative analysis now, and derivatives analysis. We're constantly expanding. But we have my team here. We have a global team of analysts that cover all instruments around the clock 24/7. So I have an Ottawa office that covers our North American markets with analysts that providing analysis on Forex, futures contracts, commodities, stocks, ETFs, you name it. And then we hand over our research over to our Asian desk in Hong Kong, and they cover all our research in markets and stocks, because stocks are trading 24 hours now. And then they hand it to our headquarters in Paris, France. That's our headquarters of Trading Central, where our largest team is at. And then they'll cover all European markets. So we're constantly monitoring the markets 24/7. And luckily, I don't have to be awake 24/7 to monitor the markets now. I can take my research over from my colleagues in Europe. So that's kind of how we operate. And then we build these tools as well for retail traders. And these tools we use to advise on our hedge funds and institutions all around the world. So again, you're going to see a nice little way how we use it to screen for stocks and save time. That's a bit of Trading Central. You can find more about us, of course, on tradingcentral.com. I won't spend too much time there. But let's just jump into what we're here for. Pretty fun and exciting, fairly new product the last few years, and it's a new way of disseminating financial analysis and fundamental ratios. And we're really trying to focus on what's the most important that you should be focused on to make it simpler. Again, now in today's world, and we were surrounded by financial data, and usually that data used to be hard to get. Now we can easily find tons of financials. The real challenge here is trying to decipher the data, what to do with it, how to interpret it. Fundamental reports are very complex and really kind of hard to read due to the dozens of data points, ratios, and historical data they provide. Our goal when we built Fundamental Insight was to really simplify fundamental analysis. That's the main goal here. So fundamental analysis on its own is not really a reliable predictor of financial success and really lacks data that takes market and economic factors into consideration. For example, what economic regime are we currently in? How is the market trending right now? Which sectors perform best in the current economic regime or in different economic regimes if you're preparing for a decline in the economy? So Fundamental Insight helps investors identify and assess companies that meet their investment style and takes into consideration the context of the economic landscape we're in right now. So this is, again, we'll go through a live demo, but what you're seeing on the screen is these bubbles based on, it could be based on market cap or volume or price change. And in this case, it's 90-day average volume. We can see big names in here, and we will tell you how to filter that and what it all means in a quick moment. But to understand what what the type of investing this is, it's important to know the history of where we came from. So most investors and traders are very familiar with the typical financial statements that appear on every brokerage platform. The data can be very challenging to interpret. A lot of research reports are not user-friendly or mobile-friendly, specifically. A lot of PDFs still exist in the research world. The problem we wanted to solve at Trading Central was to decipher pages of financial reports and extract only the critical data that is needed in order to value a stock. So here's the old school type of reports, right? Now we've kind of changed it to make it more visually appealing, bring to the forefront what's actually important to an investor or trader. Right, so looking here, instead of digging through financial reports, we have brought key data to the forefront. Fundamental Insight helps investors focus on what matters in terms of stock valuation and offers a unique way of comparing the selected stock to similar stocks in the sector. So it's a peers comparison system. I can't stress that enough. It's very important. We'll show you that down the line here today of how to take advantage of that. So again, data alone doesn't really mean much unless it's being compared to similar stocks in similar sectors. So we use the power of artificial intelligence and machine learning in order to rate stocks from a scale of 0 to 100 based on 5 key factors that we'll get into in a minute. But the data we compile and interpret provides us with a target price as well that's actually realistic and actionable. You can see that here. All right, so let me be clear. This is entirely AI driven, not based on any human analyst that can be influenced by peers or emotion, right? So we provide realistic target prices based on a total rating score, and they're in context of the current market volatility. And I can't stress that enough. Volatility is extremely important, especially the last few days we've seen in the current market. So our target prices, again, updated once a month, unlike most Wall Street analysts, which are typically lengthy and kind of random, and usually out of date. When you look at specific target prices, they may have been beyond that already. So again, we're taking into account the 12-month volatility. So this is the quick snapshot of a landing page of widgets that we're using. And we're going to get into some of the key components now. So looking at the Quantamental rating, what makes up the rating? So again, the TC Quantamental rating, or Trading Central Quantamental rating, it's a proprietary stock rating methodology developed by us in-house at Trading Central, and it covers currently around 50,000 stocks worldwide. Again, the scale is from 0 to 100, with 0 being the most bearish and 100 being the most bullish. And it's very hard to get a 100 in this rating system. You'll see that in a minute, but it's very strict in how we rate companies. But again, the 0 to 100 is pretty simple and familiar, like a test score we're all very familiar with in grade school. Right? So the TC Quantamental rating uses a bunch of factors. So we use a combination of value, growth, quality, momentum, and income factors as key metrics when we're rating a company. Now, what is factor investing? Right? So factor investing is its own unique style. So it offers the benefit of targeting specific drivers of returns to help enhance performance and manage risk. By diversifying across multiple factors, investors can really reduce the reliance on any single market condition and build portfolios aligned with specific goals like stable growth or higher income. In essence, factor investing provides a systematic and transparent approach to fundamental stock selection. Now, I'll explain these factors now as they are critical to the overall Quantamental rating methodology. So let's start off with the first one, the growth one, which is quite interesting. So the growth factor rating doesn't necessarily mean it's a growth stock, and that's a key important fact. A strong growth factor refers to the measurable attributes such as year-over-year price change in price over earnings, earnings per share growth, revenue growth, regardless of its valuation. Keep that in mind, and we'll do some examples in the live demo of how you can take advantage of this. Now, if you find yourself torn between strategies, there's always a blended approach. Some of you may have heard of the GARP, or growth at a reasonable price. GARP, as its name suggests, is a style of investing which investors really look for stocks with strong growth potential, but don't want to pay too much for them. So with TC Quantamental factor scores, you can look for strong growth and a high value rating to really meet this GARP methodology that was really popularized by legendary Fidelity manager Peter Lynch. Some of you may have heard. So that's the growth rating. And speaking of value, we have that factor as well. So the value rating does consider key factors such as price to over book, price to keep free cash flow, earnings yield, which were really developed by economist, educator, and investor Ben Graham, and then popularized, of course, by the legendary value investor Warren Buffett. Now, the value rating is important because it really helps identify undervalued stocks that may offer strong long-term returns. So these metrics are really highlight companies that are efficiently generating profits, priced attractively relative to their assets or cash flows, and offer a margin of safety by reducing the risk of overpaying for the stock. Now, this approach is really grounded in proven value investing principles. So you can do a screen search just for only value stocks using this methodology as well in some of our other tools like Strategy Builder, which you'll see in the screeners. Then the next factor we have here is going to be the Quantamental income rating. And that's based on dividend yield, the dividend growth rate, and the payout ratio. And this is critical for investors seeking reliable and sustainable income. A strong yield does, provide steady cash flow, while dividend growth reflects a company's financial strength and really its commitment to shareholders. Now, this payout ratio does ensure dividends are sustainable, helping investors avoid companies that may cut payouts. It's never a sure thing, but it's going to help you gauge is the dividend sustainable? If you see a high yield, is it sustainable? This data is going to help us really evaluate that. So all these factors together really help to identify stocks that offer attractive, growing, and dependable income streams. And we also have the quality rating as well, which is extremely important. It evaluates a company's overall financial strength and stability, helping to really identify, businesses that are capable of delivering consistent performance and weathering any kind of economic downturn. So metrics like the operating margin, return on equity, and return on invested capital really highlight a company's profitability and efficiency in generating returns. Monitoring changes in shares outstanding helps us ensure shareholder value isn't really being diluted. And while the debt to equity ratio really assesses the financial leverage and overall risk of the firm. And we'll get into that with some real life examples in a quick minute.
Hey, Gary,
Yes.
sorry, a question popped up while you were on the income screen.
Yes.
They were asking, would a higher income score generally mean a higher dividend yield or not necessarily?
So great question. So not necessarily, right? So that's really looking at, so keep in mind, this is looking at the peers in its entire sector. So maybe in this current sector for Best Buy in this example, in the consumer cyclical sector, maybe everyone has a high yield, right? So what stands out is the growth rate above average versus its peers. What's the average dividend growth rate over 5 years? We take all that into consideration using our AI models to give the overall score of 84, which may be high or low compared to the overall sector, which we'll get to in the peers comparison. But great question, yes. And keep that in mind for all of these factor scores. That's why it's good to look at not just the overall Quantamental rating, but each factor individually, and we can see, how does it rate against its peers? Maybe there's a better stock in that sector or industry to actually to help you with the strategy.
Perfect.
But
thanks.
great question. I see a bunch of questions here on some stocks. We'll get to that in the live demo, which is coming in 2 seconds, and we can look at some real-time stocks. So if you have some stocks you want to look at, please fire away. We'll look at them real time. It'd be kind of fun to do that. So there's only one factor we haven't gone through, and that's the momentum rating. That's my favorite. Of course, I'm biased. I'm a technical analyst, and we follow price action as technical analysts. But not to say that fundamentals is not important for us. What we like to do is have a stock that has a nice pattern taking place or technical event or trend supported with strong fundamentals. Then you have the best odds of success, right? The best chances by having a high probable setup with everything aligning, all the stars aligning to your direction. So, and we'll show you that as well. But momentum rating, again, it's not really talking about, again, momentum stocks, right? So this identifies stocks with strong recent price performance, which tend to continue to perform well in the near term due to either investor sentiment or actual market trends. So we use 3-month and 12-month price momentum, which is risk adjusted. And these are the key metrics. And it's about a 20% weight in the overall Quantamental score. And for those that don't know, risk adjusted, it refers to a way of measuring an investment's performance by accounting for the level of risk to achieve that performance. So it really ensures that returns are not just evaluated based on how much profit was made, but or price acceleration, but how much risk was involved to generate those returns. Some of you may have heard of the Sharpe ratio, very similar to that, but it's our own take, and it's combined with the sector overall. So momentum is a strong one, and this is a great one to look at in these days, where you can see some stocks that have a high, high quality or growth rating, and it has a momentum. You can see normally it's a nice trending stock, and something we'll look at in a quick moment. So that's the overall fundamentals of the Fundamental Insight, how we built it to be quick and actionable. We'll look at it in real time now on the platform. We'll play around with it, and I'm just going to take a look at some of if any questions coming out. A lot of stocks people are looking at right now. Actually, there's a question about ETFs. Is it the same for ETFs? No, it's not. So ETFs are a little different because we can't measure ETFs in the same way as a stock because if certain ratios don't exist. That's something coming later on down the line of an ETF, more of a screener. But this is more to evaluate companies based on its fundamentals. So you don't have to have a CFA, be a chartered financial analyst to understand what is good or bad in terms of ratios. That's really a key point as well. Everyone's on the level playing field now to understand the fundamentals, and only focusing on what matters saves you a ton of time. I remember when I first got started in my career, investing in stocks, I was generally fundamentally driven. Most educational and schools provide fundamental research and fundamental education, but nothing technical out there. So this is kind of a new way for us to show what actually matters and not having to be professional at it and combining technicals with fundamentals. But I'm going to share my screen and I'm going to switch over now to National Bank.
In the meantime, there was a question about when is the tool updated? I think I'll answer that while you're logging in. It's
Yes,
around the 14th or the 15th of the month.
That's right. 15th, if it's in the weekday, we'll do it on the 15th, once a month. And here we go. So where do you find the tool, right? And again, I'll get to the questions as we go through this. But here we go. Under Markets, you'll see a tab for Trading Central. And we have a lot of insights here today. We'll get to these in future webinars. We have fundamental insight we're talking about today, technical insights, all the technical and automated technical analysis. We have Strategy Builder to help you build a strategy, fundamental or technical. And we have Featured Ideas, the best of combining fundamentals with technicals. And we have a morning brief, which I'll briefly touch on now. If you want to understand what's happening in the markets in terms of world news and events, this is a great way to understand in the morning before you start your trading day of what to expect and what's happening. You can subscribe. It's a free newsletter, right? And this is done by our analyst team. So it's analyst-driven content. As I mentioned in the intro, we cover all markets around the world. So we have a list of what's happening. You can get a quick Canadian snapshot to see what's the news driving markets this morning, pre-market, any kind of earnings events happening. We actually write actual market moving news. So there's a lot of news out there in the world. And really, it's not market moving at all. That doesn't really matter on your stocks. We only focus on the ones that may have a possible price move or will affect your portfolio if you have the position. So there's a lot here. I won't go through all this today, but there's a US and Canadian snapshot. We see Boeing had a big disappointing earnings this morning, pre-market. We talk about it. You have the earnings expected to keep an eye on, right? Economic calendars in here as well, what to focus on today. CB consumer confidence was a big one people were watching this morning. And then we have a Canadian snapshot of earnings and economic calendar if there's anything coming up. And then we have our actual over short-term view of the S&P. This is an analyst-driven technical analysis. So you can see what are the trends pre-market, right? Of the TSX as well. TSX has futures. So you can see the trends there. And then we have all this automation combining the fundamental score as well. So we have technical analysis. We have a pattern in, say, Alcon. And we have a technical score that's very bullish, all green. Then we have the quant rating. This is the fundamental insight tool I'm showing you today, summarized for this stock. And we're looking for stocks usually above 50, right? Above 50 is good, below 50 is a bit weak. No surprise here, Marvell, low quant rating, bearish pattern, so on and so on. So that comes out every morning before the market opens. That's the market brief. So let's just get into the tool though, fundamental insight. Let's click on that. And what are you gonna see? And if you're a client National Bank, please log in, follow along with me. And if you have questions, we can attach them real time. So here we are. There's a default, and this is going to default to how you set up the first time. So when you leave this this platform, it'll remember where you were last at based on your bubble size and screen. So we have the ability to cycle Canada and US stocks, of course. That's how we can trade in North America. I'm defaulting to USA because I'm US biased. I'm a US trader, basically, for North American research and Trading Central. Most of my business is in the US, but we do some Canada too. We'll look at both. You could go by each individual sector. I have sectors all enabled, but if you want to focus on a sector for fundamental reasons, you can do so through here. And then we have bubble size and the screening tool criteria here. So we have price performance. You can look at the best stocks over the last 5 days in terms of price performance. You have 52-week price performance. You have trading volume in 2 different metrics. So we have 10-day versus 90. So, and this is going to show us, this is important because you want to see over the last 90 days, which stocks have increased or unusual volume, right? So if on the last 10 days, it's been higher than the average of 90 days, maybe something's going on. Maybe something, in the news is affecting the stock. Maybe there's more interest. And then we have the overall 90-day average volume. So this is a quick filter, right? And we can see NVIDIA is right front and center. That's been a talk of the town these days. I think it had the single biggest stock loss in a single day ever in history yesterday. And it's trying to crawl its way back today slightly. But again, this is all there's no right or wrong here. You can search by it and see, what works for you. And the colors mean the strength of the Quantamental score, fundamentally. Red being the weakest, green being the strongest, right? And the size of the bubble is more on the price performance. The bigger it is, the larger the price performance. But you can change that. So I have 5-day price performance. I like this 10-day versus 90-day to find outliers, right? We have some big scores in Vince Holdings, some stocks I never even heard of here, which is quite unique. It really brings to the forefront some stocks that aren't actually always covered by an analyst, which is quite important. A lot of the opportunities out there lie in stocks that are not actively covered. And you can see some of these happening right now, right? So a lot of these stocks I've never heard of, right? Going to Canada, same thing. We have a bunch of them here, right? Some increased volume in Finlay Minerals with a strong score, strong volume. Let's just jump into this one. This is a good example because it's not a heavily traded stock. In fact, it's a penny stock, but we still have some fundamental data, right? Where most companies would not bother to cover this stock because it's such a junior company. It's a quant-driven model, so we can pull in some interesting data as long as we have it. Of course, income won't appear because there's no dividend. Of course, that doesn't make any sense. So we'll take it out and we'll reweight all the factor scores to make the score. Okay, and what else do we have? So let's just use a bigger stock. So I was looking at one today, popular Canadian company, Kinross. Mainly because it had one of the highest Quantamental ratings, and I was a bit curious as to why. So let's just look at a breakdown of what this all means. So we have the overall Quantamental rating. If you hover your mouse over the I button, we'll give you that definition of what that means. Again, I've described that already. So in this case, we can see it's a high rating. Anything above 70 is very rare, by the way, from our models and our research. If you get above 70, it's the best of the best, and it clearly outperformers, and then not always easy to find. So from here, we can see all the factor scores, right? So we have a growth 91, 66 for value, 84 for quality, 79 for momentum. No surprise there with recent price history. And income's a bit low, obviously. Again, not a big dividend payer compared to others in its sector. But let's look at that. If I click on growth, I'm going to see the trend of the growth rating. It's been increasing, right? We can see the key data, right? Price earnings change year over year. It's actually dropping. Earnings per share growth, 222%. Revenue growth, 29.9%. If you want to compare it, this is almost 100. So probably one of the best in the metals and mining sector. Keep that in mind. It's not by itself. It's comparing it to other stocks in its industry and sector. Value, right? How does it look for value? So earnings yield, 6.64%, right? We have price to book 1.72, price to free cash flow 11. So it's kind of mixed bag. It's been consistent though. Income. This is where it's a bit weak. It's got a lower yield of 1.23%, right? No real growth rate to here, and a payout ratio of 20%. So that's been declining in terms of its sector. So not a stock I would pick for income, right? Then we have overall quality. This is pretty high rated. Operating margins looks pretty good, 37%. Again, among its peers. We have low shares outstanding. Return on equity is 5.48%. It's pretty decent. I like things more in the 10% range personally, but not bad. Again, and then we have the return on equity change up 3.6%. So that's trending better. And then we have momentum. This is the price trends, right? No surprise here. We've seen this pretty strong in the last few weeks. So we have 3-month and 12-month trending up. Anything above 1 is extremely high and good, right? Again, this is risk adjusted. It's taking into account volatility, right? In the short term, it's been more volatile. Longer term, it's been quite decent. So that's how you break down all the factors, right? And then you have the overall rating where it was suffering in 2022, and now it's been increasing and trending higher ever since, right? So we can see, the historical evolution of the monthly Quantamental rating. Again, once a month. What's unique and fairly new to the product as well is the 12-month target price, right? Stock's at 15.29, right? We have a target price of 18.40. We explain what this means and how we get to it, right? So, and we're using actual volatility data. So we have to have a realistic target price, not some pie in the sky idea of we may think where the stock's going to go. we're actually using quantitative data and the overall score to project a realistic target price that updates every month. Then we have key data always below here. So no matter where you're looking, you're going to have the key important information. Market cap's going to be there, price to earnings, so on and so on, dividend yield. So you can look at that quickly and move on. For some people, this is enough, right? To look at this key data to understand what the stock is in the overall picture, then we can move on. And then I'll get to some questions here, some good ones coming in. I'll just finish, what all this is, then we'll dig into it. So the peer comparisons, where I find a lot of value as well. If I'm looking to invest in this sector, I can see now how Kinross compares to other gold or mining stocks in the sector. So right now, overall, with the total quant rating, it has 74, which is very strong, right? And it's comparing to all other stocks in the sector, it's the highest, right? Now we can go ahead and change that. So maybe I want to see who has the highest growth rating. Now we have some other stock coming up, Barrick Gold, right? So that's something I might want to put on the watch list. I can also rank it by value. Although it's been trending higher, is there a better value stock in play? So Kinross ranks 66, right? But we have Teck Resources at 73. It's higher. So again, I could go through this one by one all the time. I won't do that today. I want to get to some of your questions. But really, we can do any factor score and we can get the whole picture of how it compares. So if I looked at this example here in Teck Resources, it looks better from an overall quantitative rating. But if I click on it, we know that there's some factors that are not as good, right? So we can see that although it had a high value, growth is suffering and momentum specifically is also quite low. And we can see that probably on a stock chart, which we can pull up later on, technical insights. But again, it really reflects the overall trend of the stock. Price does matter, and we're combining it with fundamentals, which is fantastic. And now we're here. We can see this stock. We have, 54. Anything above 50 is how I do my screening, by the way, when I'm looking for stocks from a technical perspective. I will look for stocks that only have a rating of 50 or higher, just to make sure that I have fundamentals on my side. Right? They're going to be the best of the best. It's not about the highest score, right? Because not all stocks will ever get to the 70s or 80s range, but it's above 50s where we've seen from back testing our performance really shines. And now the last thing I want to talk about before we get into some more live examples is the nowcasting, right? So this is quite unique. Again, totally quant driven, right? There's no bias here at all. It's we analyze all stocks in the sector based on every economic regime going back 50 years, and we can tell which sectors outperform in current economic cycles. So right now, based on all our economic data, we understand that we're in an expansion. And again, this is subjective. You may not agree with it. You don't have to agree with it. Maybe you think we're in recovery or in a slowdown now, right? From our models, again, proprietary models, Trading Central, we're in an expansion phase, and we can now see how this stock performed in the past. So as an example, I'm looking at Teck Resources just because it's there. Value stocks have not excelled, but interesting to note, it's considered a value stock, right? Based on the value of metrics. Basic Materials was modest during expansion, so not really an outlier, right? And large cap has really not been favorable for expansion. So we can change that though, or we can learn about it. So if I click on expansion, a pop-up comes up on the economic cycle. What we can see here is, expansion may be a result of, and we can give you the reasons for it. Growth peaking, credit growth strong, profits peaking possibly, neutral policies and government, inventories and sales growth, so on and so on. We can tell you what has performed in that cycle. These are the type of sectors you should focus on, right? And in expansion, what underperforms? We can see large caps, some utilities, some value stocks, which we've seen that being the case over the last few months, right? Real estate's been a major underperformer. So again, we're going back on the actual data, the real history, and analyzing how it's performed in the past. Now you can change that, right? So if I'm worried about a slowdown coming, as some economists are, right? You click on that, now we can see how the stock would perform, right, in that cycle, right, based on a past history. We can see it's favored large caps, right? Nothing else has really affected it, right? It's been kind of negative. In a recession, right, we can see pretty more neutral. in a recovery, not a big performer. Again, based on price history going back over 50 years, right? You can learn about recovery. Again, if I want to look at, if I'm worried about a slowdown, I can say what affects slowdown, right? What should I be aware of? Which sectors should I be aware of, right? What sectors underperform? So again, this is a whole quick snapshot of understanding the economic context, where we're in. Again, this is based on economic data, right? And we can kind of forecast what to expect based on price history. So that's nowcasting. I think it's a pretty cool tool, and I like to play with this. And before I buy a stock, I'll throw it in here in this model to know what I can expect if this economic cycle changes. Okay. While I'm here, I'm going to look at a quick bunch of questions while I'm here. And Bobby, you can always chime in if something catches your eye.
Actually, well, there was one question about the peer comparison, but I'll answer it. So, they're comparing Kinross to their peers. So think of it as, large cap stocks will be compared to large cap stocks, mid cap stocks to mid cap stocks, and small cap stocks. So you're not going to have, $100 billion company and a $250 million company being compared. So just keep that in mind. It's going to, size or relative size matters. And Gary, there was so could we go perhaps in the previous screen, right, to show them the chart version instead of the bubble version? For
yes.
For our clients who are colorblind, I think they'll appreciate that viewing option and how to get there.
Yes. So you're talking about this main page now, right, Bobby?
Yeah, exactly.
So the landing page, again, it's good topic to mention. Bubbles are the default. We can change it to table view, which a lot of people do like, where you can cycle and rank them by the highest to lowest on Quantamental rating, right? So I'm looking at all stocks in Canada, for example, and this is how I kind of do my research, to look through anything that looks attractive to me based on market cap. I tend to avoid the junior companies because they do have a lot more extra volatility potentially. But again, this is how you can change that based on price performance as well. What's performed. Look at that super high one on metals and mining. So mining's been pretty popular here, I guess. So pretty neat. They can change it to US, and I can see what's been performing the last few days. Market's been kind of struggling, so we can see what's been outperforming. Again, some biotech. Healthcare is awoken again. Some software. Twilio is in there. But yeah, table view is fantastic. You can cycle by market cap as well, by the way. Any field you can cycle through. Right, so we see the largest market caps. Moderna's coming back to life here. If I click on that quickly, I'm jumping right in. What a huge rebound in the Quantamental score there. Yeah, so that's table view. Right, on the USA side, if I look at 10-day versus 90-day, I think we're probably going to see NVIDIA pop up too as well. If I go by the rating, what do we have? Surprising, not much. So we can go by volume, and I could see some huge activity coming in. Some of these names I never even heard of. So again, it works really well for the smaller cap stocks that, again, don't have a lot of coverage. If you want to see visually what it looks like, right? Again, bubbles are great for that. And they can go ahead, again, play around with the 52-week. What else do we have here? Some big movers on some stock, TSS Inc. So someone did have a question about some factor scores aren't always updated. And it's more of a data issue of if it's a very small stock with a low market cap, we may not have all the fundamental data available to us. We're pulling from our data provider, right? So not all ratios are available if they don't have, say, consistent earnings, right? Quarter over quarter. That does happen, right? It won't affect so much the overall score, though, because we'll back it out and reweight the available factors to meet that total Quantamental score. But I was looking at, NVIDIA is an interesting one. I was looking at this morning because the stocks was punished so much. But fundamentally, it's still above 50. It's still strong. It's got a consistent overall Quantamental rating, right? It's considered growth. And this is one of those rare cases where a growth stock really is showing good growth metrics, right? Mainly because EPS growth is quite huge and revenue growth. But then you can also compare, right? So I can go in here and say, okay, if I'm looking at growth, do other stocks meet that criteria, right? It's one of the highest. AMD comes up now, right? Lower score overall. Why is that? Probably momentum. I mean, I'll look at the price chart and see, I'll compare both things. I'll look at the fundamentals and then technical. So by itself, keep that. Not made to be a trading tool on its own. You want to look at other factors as well. We can look at value here on AMD quite weak, right? But it's improving, right? So take it for what it is. I mean, maybe you're looking at to catch the bottom and look for stocks that have been underperforming and trying to perform from a value perspective. You can do that, right? So I can cycle right through all to value now. Let's just do that as a quick example. Value rating highest in the semiconductors, because it's been a talk of the town recently. AMD quite low, right? Who's the highest? We got Skyworks up there, FSLR, ON Semiconductor, Qualcomm, so on and so on. Again, this is as of the 15th of the month. This will change coming up in half a month to go. So if I look at First Solar, what do we see? Right, consistent score, no income, doesn't affect the score though. That's okay. Momentum's been weak, right? So again, this is how I go through it to look at any outliers, right? Before I validate a trade, I'll look and make sure it's above 50, and some of the other products will help validate and search for those specific, quality factors or any kind of factor. But I'll quickly look at some of the questions now again, because we're getting low on time. Anything else that catches your eye there, Bobby?
Actually, you know what, Gary? I think that we have a segue perhaps to going into strategy builder, because there were a couple of questions about back testing the scores, but also about filtering out on market cap. So I think
yes,
strategy builder will certainly answer those questions. And for those of you, so this is really, we're having actually 3 webinars. So January it's Fundamental Insight. End of February we'll be having another webinar with Trading Central on strategy builder. So think of this as a little bit as of a teaser of that webinar, but we'll be able to answer the question about the back testing.
Yes, good question. Good segue. So again, all of our tools, again, we want to provide the best insights, and all our tools can be used interchangeably. So this is to dive in deep into the fundamentals that matter to a stock, right, versus its peers. Now, you can quickly do a search for that under Strategy Builder, right? So for example, in Strategy Builder, and we'll talk about this, like I said, and a whole new webinar, it deserves its own, but under Expert Strategies, for example, I've built some of these, right, that are pre-populated. So 70 out of 100 for, say, US, right? If I click on that, right, I've focused only on the Quantamental rating. I can now see the best of the best, and I can cycle by that. So I can go from high to low. We have a back test available as well. But I'm just going to cycle it right now one more time to get the top. And what do we have? I'm just curious now. So we're updating real time, 86. Here's some stocks, right? So we got Jazz Pharmaceuticals, Petruno Mining. So this is one way to cycle. But if I do a quick clear all, I want to find just the top of the top in Canada, I can do this. So if I hit bulk edit, more criteria, I want to focus on, let's say, market cap, because someone has a question about market cap in there. Even stock price, I'll put that in there to avoid some penny stocks maybe. And then I'll add the Quantamental score. But, this section down here, Quantamental Insight, that is what I just talked about for the last half an hour. But each individual score or the overall score can be added into your own screen. So maybe I want to focus on, let's just say I want to find value stocks in terms of value, in terms of factor investing in this current market landscape, right? And I can do it by sector or by industry. There's endless possibilities here. Keep that in mind. So I could spend hours doing this, and this is what I do all day. So I won't go through everything today, but I've done a quick filter here. And if I do say I want the value of 70, which is pretty strict, 70 or higher, and I can do it, let's just say Canada, because of course we're in Canada. Let's do a Canada search, high value score, and I have 300 stocks now. And let's just say I want to do a 5 billion minimum market cap, just to make sure I get more, established companies. Only 14 come up. What do we have, right? Molson Coors is in there. Uranium Trust, Tech Resources, we talked about in Fundamental Insight already, right? So there's a bunch of ATCO, Air Canada comes up. So interesting names, right? From a value perspective, right? This is a pretty strict screen. So if I say, I like to do it at 55, right? To get the majority, because anything above 55 is going to be pretty good. I could also add more factors. Maybe I care about value and I care about income. Maybe I want dividends, right? And just for fun, we'll add in, so it's more specific, the dividend yield to compare. Do I have anything, right? We're getting pretty strict now, but we have 38 names. So this is how fast you can screen for good fundamentals, in terms of a factor trading methodology, and focusing on other things that matter, right? In terms of the sector it's in and market cap. But what do we have now? Whitecap Resources, Pfizer, Neo Exchange, of course, has US names in there. CVS Health, Molson's still there. Canadian Tire is interesting. That's there as well. And again, you can keep sorting, right? And look at the dividend yields. And you have a high score for value. So if I want to focus on the best of the best for value, we have 55. And income, let's do 55 as well. And now I have 16 names, right? Open text in there, Canadian company as well, locally. And then we have all these names. And then if you want to test out the methodology, as Bobby was mentioning, I can go ahead and do a calculation and do a back test. All right, quickly, we'll do that here. It takes a couple seconds to compare against the S&P or the TSX 60 index in this example. And sometimes it won't always work, right? So, what do we have here? This is a pretty good example. In a matter of less than 5 minutes, we have a strategy that's outperforming the TSX 60 already, right? Focusing on value, dividend income, right? And income overall. So we have a 13% annualized return versus 8, right? 3-year returns, 80%. So this is quite interesting, right? And you can see the chart where we haven't had any new names since last year. So that's a pretty good one where I would like to go ahead and I can go ahead quickly and just save it, call it what I want. I already have this saved already because it's one example on the site, but you can make your own, right? Save it to whatever you want, create an alert, so on and so on. That's how you can combine the two. And we'll get into that in the next webinar coming up very soon. Any more questions before we jump here? So is there a way to filter out stocks based on market cap? Yes, I think I answered that. Over 50 million. Again, you can use that using this tool, right? Market cap, I can do 50M. And you're going to get a lot more results, right? And so let's just say, well, while we do that and I look at questions, I'll do another back test. You can keep doing this, by the way. I can recalculate by changing one metric. And as that's going through, I'll just say, okay, I'll look for more questions here. The P ratio as a graph, we have it as a factor score. So again, the product's not made to evaluate each individual ratio just by itself. It's made to compare to the sector. So yes, again, don't have the ability to do the chart of the PE by itself. We do the whole picture a different way. Right. Look at how we lowered market cap. And I kind of knew this would happen anyway, but if we lower market cap requirements, you get a worse return, right? Again, junior companies have more volatility, could be the factor here. But I have to dig into a little bit more to understand why. But that's when I would go back and I could say, in this case, I don't like that. I don't like the market cap change, right? Then you can go and revert back quickly. So looking here, I can click on screen 2, right? And it's going to go ahead and revert back to screen 2. And I can go back and continue to edit. Notice how it went back to 5 billion.
Right.
All right.
Gary, we're looking at the questions. There's just a few I'd like to answer. So a lot of you were asking if can get a copy of the presentation. So our goal is to make it available on our YouTube channel as a webinar. So give or take a month, the goal would be to have it put up there. But in the meantime, we actually have these mini videos. So actually, for Fundamental Insight, I believe it's only 7 minutes long, the video. So there's 2 options. If you actually go onto YouTube, just type in National Bank Direct Brokerage, click on our YouTube channel. Encourage us, subscribe, and you'll be able to find the video on Fundamental Insight. There's also one on Strategy Builder as well. Actually, in Strategy Builder, we made 2 videos. One of them, how to find investment ideas, and other is how to create your own your own list. For those of you who are already National Bank Direct Brokerage clients, this shouldn't be new. If some of you happen not to be National Bank Brokerage clients, you've gotten a quick view of what our platform looks like. If you didn't already know, one of the many advantages of dealing with us is that you can buy and sell your stocks and ETFs at 0 commissions. So that's certainly a big advantage, and you have these nifty tools to help you as an investor. And you know what? For those of you maybe a little less tech savvy, Gary, could you just scroll to the bottom of the page?
Yes.
that you're on, all the way at the bottom. So you can see on the left-hand side, there's the icon for the YouTube channel. So if you click on that, you'll go straight to our YouTube channel, and you'll be able to view the videos. Maybe the last thing I'd like to mention. So we showed you how to find it through the regular viewing, but if you go on to our quotes section, here, Gary, just on right-hand side, top right-hand side.
Oh, yep.
And whatever, choose any stock you want.
Let's just grab one that people threw up. ZOMD. Let's see. Never heard of this stock myself, so there we go.
So some of you might have already seen this tool in our quote section, right? If you just scroll under, it's actually right next to analysis. It's no, sorry, it's in the center, fundamental insight. So while you're on the quote page, you can see the score.
Right on. That's a pretty high score. Nice.
Gary, were there any questions you saw there that we haven't answered?
Yeah, there's one I saw. Someone did mention the month-to-month update. So many things can change once a month. So why only once a month? So again, this is mainly due to how we get the data. Keep in mind, in North America at least, companies report quarterly. So to get ratios that are accurate, generally most fundamental analysts will wait for every 3 months. We've changed it to once a month because we use a momentum factor as well. And so that's why we were a little bit more frequent, and we give a price target that's always released once a month based on the current monthly volatility. So this is a constant debate internally of how often should you update fundamental data? Well, it's not really updated that often, right? A lot of it's price sensitive. So I think once a month gives you a level of consistency. Again, it's not made for day trading. Keep that in mind. We're not active traders here. It's made to look at long-term analysis, 3 months out, 6 months, and 12 months, what you do with the stock. So once a month is, in my opinion, probably extremely frequent. But maybe if you're an active trader, you look at the quick number, and it could be different today. Look at NVIDIA, how the stock tanked, almost 20%, yet we have a very high score still. Fundamentally, nothing has changed with the company, right? But valuations may have changed if there's some perceived event coming up, say AI costs are less than people thought. So again, once a month is our kind of our will be based in research, the best way to update this data for a more consistent basis. But good question. And then I see some questions, good questions coming in. Does it filter out potential value traps? I think it does in a way, right? So the way we look at value is a lot different than, say, what a normal street analyst would look at value, right? Not so much is it just cheap, right? How is it cheap comparative to other stocks? So I think it's giving us a more true indicator of what a value stock really is, in my opinion, right? Even though the stock could still be trending lower. So there's also a price component we have to be aware of, right? When looking at value stocks. Don't just buy something because its value is cheap. What else is happening? Is it in a major downtrend, right? That does matter. Trend following matters, right? So if it's constantly making new lows, it still doesn't mean you should be buying the stock, right, necessarily. So it's giving you another perspective, right? But good question. And the weight, overall, it's all equal weighted, except for the last one, momentum, depending on, it will change. It's dynamic, right? So in this example here, we're not going to weight every score equally because we don't have all the factors, right, to make this up. Specifically for this stock, we're looking at on the screen. So it will change based on what we have in terms of the data. It's dynamic. And any other questions I missed? I don't think so from my end. But again, I'll be back if you have more questions, and you can easily find me at tradingcentral.com if you have questions as well. And I'll be back for future webinars where I'm sure we're going to combine this again because all these tools kind of go hand in hand and really help paint a whole overall picture of the financial markets.
You know what? I'm going through the list. I think I think we're good. So maybe just as a little scoop, there will be another webinar on Strategy Builder that will happen on February 25th. Next month. So if you'd like to find out more, by all means, I encourage you to sign up for that webinar. And again, we have these these mini YouTube videos that you can consult, to quickly navigate through the tool. In the meantime, before this webinar becomes available on our YouTube channel. Actually, you know what, Gary? There's one last question. About like, they're asking if it's a low a low quantum rating. Is it well? They're asking if it's a buy signal, but I guess like even like a high quantum rating is not necessarily a buy signal, right? Or a
Yeah,
sell
what a great
signal.
question to end it off. Because that's important. We ought to be very clear with that. So yes, the score itself is not a buy and sell signal, right? Because the whole sector could be very weak, right? So maybe look at a real estate sector, it could be all negative, or I could even do that here, right? So I can go ahead, hit real estate, get only real estate stocks, and we can see, is there any, maybe there's some outliers. It doesn't mean that you should not buy them, right? Because again, it's your own investing style that matters the most, right? There's no right or wrong here, by the way. So if you're a fundamental investor, these are the key factors to consider. I know there's some questions in here about, I follow this ratio. Why is it not there? Or it's because we've done our research and realized that the ones that matter the most to our overall valuation, we've put into this product to kind of help you disregard all the thousands of ratios out there. These are the ones we deem, with testing, seem to matter the most to make the overall score. But again, it's not a high and low buy with a high score, although it's preferable. I've seen stocks that have a 96 rating where the stock still makes new lows, because you got to keep in mind, this is data driven. And there's the whole other aspect of investing, which is psychology, right? So the market could be perceiving something totally different than the fundamentals, and you see these crazy downtrends or uptrends regardless of the fundamentals. So it works both ways. So you can have a stock that's been trending higher for a whole year, making new record highs, but everyone keeps saying, well, it's too expensive or the PE is too high. That doesn't really matter in terms of the overall context of psychology of the markets. That plays a different role. So, and we have tools for that, which we'll get into another webinar on. We can combine that as well. But don't look at the score itself as being a buy or sell. I like to look at it as if it's at 50 or higher, fundamentals are on my side. But then you have to look at other factors. Is the stock trending in the right direction? Are we making, new 52-week highs? Or, or is it still plummeting? Are you trying to catch a falling knife? That's a dangerous strategy. So there's other factors involved. But great question.
Yeah, that the tool that Gary's implying is it's technical insight, and the webinar for that particular tool will be happening end of March. So just as a as another heads up.
Yep.
And that one there, again, anything with technical analysis would be, when we become a little more familiar with it, it's certainly time well spent. So you know what, we've reached the cutoff time. You know what, I'd like to thank everyone for coming. A lot of good questions. I didn't expect this many questions, so it shows that it was very engaging. So thank you everyone for coming. Gary, thank you for joining us. You know what, I've done this webinar in the past, and really you took it to a second level, to a higher level. So I really appreciate that. Thank you very much. And everyone, hopefully we'll be seeing you in February for the second webinar on Strategy Builder. Thank you very much, everyone. Have a great day.
Thank you all. Happy trading.